Welcome back. My name is Arya and I don't waste your time, so let's get straight into it. Ladies and gentlemen, in today's video, we're going to be analyzing Google's Q2 report. Now, I want to get this straight just right at the start. I want to get this out the way. We're not going to go over, this is what the earnings per share grew by. Oh, this is the exact down to the penny revenue amount that Google did in Q2. The stock went down, so it must be a terrible. I'm not doing any of that. There's plenty of other YouTube videos for you to watch if you're interested in that type of content. In today's video, I'm actually going to be analyzing Google's Q2. I actually will be looking at the various different revenue lines, the trend in these different revenue lines, and what I think that means for both Google and also peers such as Microsoft and Amazon. So without further ado, let's dive straight into it. The software in front of us that you're looking at is FinChat.io. And one of the reasons why we're actually using FinChat.io is the segment and KPIs section of FinChat. So if you didn't know, FinChat has this just honestly wonderful feature where you could go down here into specific Google items that they track. So for example, YouTube revenue, or for YouTube premium services, the retention rate on that, or the specific growth of, for example, Google's cloud revenue or Google cloud profitability. All these different items here. It's on screen now. You could paid clicks change, traffic acquisition costs. They got a bunch of different stuff, right? So, but the key items that we're going to be focusing on is 4 different revenue lines that Google has, and those revenue lines are, of course, the cloud computing division, network revenue. So this would be ads, like banner ads. For example, if you click on a website and there's like a news website or something, there's ads on the side and all that type of stuff. It's those specific type of ads. It's banner ads that are on third-party websites and whatnot. That's Google network revenue. Of course, YouTube ads revenue, just which is what we're watching on at the moment now. And then there's Google search. So when you search up the 10 blue links, the top 4 is always going to be Google ads. They're paid to be at the top there, right? So these are the 4 main revenue drivers for Google. And one key call out is Google network revenue. If we just flip back to the annual, Google network revenue in 2017, 2018, the late 2010s, it made up a higher percentage of Google revenue. But over time, these banner ads, the Google network revenues, they've continued to decrease in percentage share of the various other portions of Google's revenues. This is frankly because YouTube is growing incredibly fast. Google Cloud also growing incredibly fast. We could even look at the growth rates at the bottom here, right? Google Cloud since then has grown at roughly 40% per year, YouTube roughly 25% per year, right? So we've seen a continuation of this. If we flip to the quarterly view, you can see Google Cloud and YouTube ads, they're both growing incredibly fast compared to the Google network revenue. And then search is also keeping up with ads, give or take, roughly. And of course, there's a good bit of variability from quarter to quarter, but in general, the trend seems to, it's just business as usual, right? And moving on, I did want to make this call out with particularly the cloud segments of the business. If you guys were around in 2022 investing, there was a great cloud slowdown. So you have notable companies such as Amazon, Microsoft, and Google, which hold like a 70% market share of the the cloud computing industry. And so between the 3 of them, and you could see this in the charts of every single one of them, we saw a massive deacceleration in cloud computing expenditures. Of course, a good bit of that actually does come from, the pandemic period where there was a lot of pull forward in cloud computing demand. So anyways, we had a general slowdown in 2022 with cloud computing, but in the past couple quarters, between Microsoft, Google, and Amazon, we've seen a reacceleration in cloud growth. Now, of course, there was a lot of doomers, particularly on the Amazon side of things, saying, oh, it's over, the cloud story, it's over, Amazon sent it down to 80 a share. But of course, we've seen as budgets loosen up and as various different companies, they start to look for AI products to possibly incorporate into their workflow, we've seen that there's a lot of new expenditures shifting to the cloud again. And as a result, you could see it graphically over here. Google's cloud revenues have reaccelerated yet again in the most recent quarter, albeit not something that's incredibly meaningful, but it still does speak to the fact that the cloud as a whole is seeing reacceleration industry-wide. This could be particularly bullish for Amazon and Microsoft, which report next week, right? So we see trough of Q3, and then if we scroll down here, we could even look at, for example, Microsoft, right? So both with Microsoft and AWS, you can see that again, Q2, Q3, we've seen a trough in cloud computing expenditures, and then it seems to be reaccelerating. I think particularly on the AWS side of things, this is a much more beautiful, like almost like an S, right? So again, just interesting call out. we've seen a continuation of cloud computing revenue growth, incredibly bullish for Amazon. And then one last thing here, which I saw a bunch of different earnings videos on Google beforehand and even on Twitter. A lot of people were saying, oh, this is such a disastrous quarter. One of the main things why the stock actually sold down is, YouTube's not doing too good. Look at YouTube revenues. YouTube revenues deaccelerated year over year. This is one of the main reasons the stock sold off. That's why the market didn't like it. But what they like, guys, it literally doesn't take that much time. Just go through the earnings call and see what management said. And I personally listened to it twice yesterday, both on a drive to somewhere and then the drive back. I listened to it twice. But they literally talk about this on the earnings call. Now, if you didn't know, I highly suggest you listen to like at least one of the Google earnings calls. You would immediately see the CFO of this business. She's the one that's running everything. At least by the looks of it. Like, she literally knows everything, doesn't go politician style and beat around the bush, not really answering the questions. So she literally gets asked about the YouTube revenues and she gives a straight answer. So over here, she says, I think the important point to note, and I tried to tease out in the opening comments, was that the deacceleration in this year-on-year revenue growth for the second quarter versus the first quarter was primarily reflected with the tougher comparison versus the first quarter, because at that point, as you probably recall, YouTube was lapping negative year on year, right? So the important thing to note is the strong comparable with the prior year. And then she mentions it one more time here. She says Q1 benefited from the extra leap year. And then on top of that, you're seeing the anniversarying. She kept saying this, I don't exactly know, but we're anniversarying. So this happened last year, of the ramp in APAC. I think APAC stands for Africa, Pacific, or sorry, Asia, Pacific, Africa, and something. I don't know. Those like Asia and Africa and Middle East and all that type of stuff, right? Base retailers that began in the second quarter last year, and foreign exchange headwinds as well as that we noted. There are some timing issues going on, and that's what we're trying to highlight with the underlying operating strength. So if you take her word for it, now I understand like Google management, maybe not the most trustworthy, but the way she sounds, okay, that's all I'm saying. The way the CFO of this business sounds, and the way she was just straight shooter, just answering the questions, I tend to want to trust her. And I don't know the track record. I haven't gone back into the earnings call to see different call-outs that she's made in prior years and whatever. But based off of my first impressions, I tend to trust her word in saying that there's tough comparables, there's FX headwinds, foreign exchange headwinds with the prior year. And then on top of that, you might think, oh, the one additional day of leap year might not impact it too much. Guys, that's like one additional day of revenues, right? Like that could be hugely impactful, especially on a percentage to percentage basis, right? So you have like the combination of all these different factors coming together. And I think all those things combined made it so that when you're looking over here on the comparables of today's YouTube ad revenues to the prior year, it looks like as if it's slowed down, when in reality, it's probably just the tough comparable to the year prior, right? So just one important call out on that front. I know a lot of people were talking about that both on YouTube and Twitter and whatnot. And then one last thing here that I wanted to touch on before we actually jump onto devaluation and whatnot. I plotted the revenue growth rate of all the different notable segments of Google. And I promise you it's not as scary as this looks. But long story short, you can see like, I think this is pretty overdone. I mean, for a business that's at like a 23 PE, the fact that they're able to grow revenues in the most important segments, right? For example, the Google subscriptions and the YouTube ads, as well as the search ads, particularly the 10 blue links, those all grew at like 13-14% year over year. And if you switch this over to the last 12 months view, you could see that some of those segments in there, particularly the subscriptions segment, actually grew even faster than that, right? So, I mean, from like an investor perspective, like it's business as usual. If anything, some of the items here are picking up, particularly like the cloud that is incredibly strong. It's growing very meaningfully. It's a 26-27% growth. And these business lines are progressively taking market share from the banner ads, right? Which have been negative for multiple quarters in a row, right? So again, it seems to me that the sell-off, what is it, like a 5% sell-off today, like I feel like that's overdone. I think that pretty much sums up my thoughts on this. Like, it's business as usual. If anything, most of these revenue lines and most of these items actually improved. Like they're re-accelerating. This is good. We should be excited. Sure, it might not be because of AI or anything like that. And they talked about like they're dumping, I think, $5 billion of CapEx into Waymo. But I mean, the main key drivers of revenue and the main key drivers of profit for this business have reaccelerated. This is good. We should be excited as investors, right? And this is what, like, if you're ever going to take anything out of any of my videos, this is the one thing that I like really hope that you guys understand. When there's a quarterly report, and whether the stock is up, down, it's doing backflips, whatever the case is, look at the actual numbers. Listen to the earnings call. Listen to how management is talking about things, and decide for yourself what you think of that report. Whether you think, and of course, there's a tad bit of like bias that comes into this. Obviously, as a Google shareholder, I'm looking at these things in a positive light. And let's say you recently sold a stock, you're going to look at it in a negative light, but just try to be objective and try to decide for yourself, right? Otherwise, like, you might look at the stock price and think, oh, surely they had a bad report, but that is definitely, at least in my opinion, definitely not the case in Google. Does that mean necessarily that it's a buy or whatnot? That's why I've built this valuation spreadsheet that I like to include in most of my videos. But long story short, what we're doing here is we are taking the current valuation of the business and we're dividing it by how fast we expect the company to grow by. I've estimated that Google is going to be producing roughly $80 billion of free cash flow in 2024. And based off of that, based off my assumptions, I'm saying roughly a 17% growth rate is going to be applied to Google on a going forward basis. That lands you at roughly 2 times their growth rate, their free cash flow to growth rate. And that's about undervalued to maybe around fair value. But for me, I got in at a much lower price. I got in at a $132 average price per share. At the time, it was trading deeply, deeply undervalued. It was closer to where Salesforce is at currently, roughly in the 1.6 times multiple. So for me personally, I would have to wait for this to get a little bit lower before I really get excited with perhaps adding to my position. I do want to eventually add to my Google position as it stands currently, which actually we track this on FinChat as well. Using the dashboard feature. But as you can see currently, Google is only like a 10% position for me. Yeah, give or take like a 10% position for me. So I would love to add this and maybe even bump it up to exceed MasterCard for me personally. But I don't really get excited until maybe like the 160 range, which we could test it out here. Like probably the 160 range, maybe a little bit lower. That's when I would probably be wanting to add Google to my portfolio. And then one last thing I wanted to just fit in at the end of the video here. I am affiliated with FinChat.io, the software that you've seen me use for the entirety of this video. FinChat isn't restricted to just like the big tech companies when it comes down to segmenting KPIs. They have KPIs on literally any stock you could possibly imagine. I mean, Ulta Beauty, which is a company that I've previously talked about on the channel, you could go down, you could look at the net new store count or the total store count. You could look at the average transaction costs or the average ticket growth. So for example, how much the average person is spending at Ulta. They have tons and tons of KPIs that you could go track specifically for that company. Netflix, if you were curious about the revenue makeup by geography or the profit makeup by geography, or for example, over here, the average revenue per membership, right? They have all these various different KPIs on the website. Evolution Gaming, we've talked about this video, we've talked about this company extensively in the past. You could see the makeup of live revenue versus RNG, again, in various different various different geographies. Same thing with Paycom, another business that we've talked about in the past. You could see how much of their revenues are reoccurring. Additionally, you could see the retention rate on those revenues, right? So, for example, for Paycom, we'll just bring it up here. You could see that in the past, they do report this annually only, but the retention rates on that has been roughly between the 90 to 94% for Paycom in the past. And then you could play around with the chart. You could do bar charts, you could do line charts. Of course, with the bar chart, it doesn't look that significant, the recent declines in retention rates. But again, lots of different functionalities with this. If you're interested to try FinChat for absolutely free with no strings attached, you could do so using the link in the description down below. I do make commissions off of that if you end up going for the pro version, which is what you're looking at now with full functionality and whatnot. With that being said, if you like the fact that I don't waste your time, I'm going to continue to post high quality videos just like this one, so you should hit the subscribe button. It doesn't cost you anything, and you can always go back on that decision if you end up not liking the videos, but I highly doubt that. Thank you for watching, and have a great day.